A market structure shift confirms the change, price retraces into an institutional zone, and the new trend begins. This is the smart money blueprint. In today's video, we're going to break down one of the most important topics in trading: market structure, trends, and the smart money mindset behind price movement. Most beginners only look at candlesticks. Smart money traders look at intent. Why price is moving, where it wants to go, and whose liquidity is being targeted. Let's go into it. Now let me show you swings. A swing high is a point where price pushes up, stalls, and reverses lower. It can be recognized by the fact that the highest point of the wicks of the candles on the left and right are lower than the highest point of the middle candle. A swing low is the opposite. Smart money uses these swings for a reason. Swing highs often hold a cluster of stop losses above them. Swing lows contain liquidity from trapped sellers. Price does not move randomly. How a swing high forms from a smart money perspective is: first, the price moves up, then the retail traders chase the move, stops accumulate above the swing, institutions push price into that pool. They fill large sell orders using retail stop loss liquidity. This creates the swing high and a shift in structure. How a swing low forms is the same logic. Price moves down, retail panic sells, and stops gather under the low. Smart money sweeps that liquidity and market reverses upward with a displacement move. This displacement shows strong institutional intent. Now swings become smart money structure. We can map structure using market structure shift or break of structure. A market structure shift confirms continuation. We use this structure to confirm the direction. A break of structure signals the start of a new trend engineered by smart money. This signal is more meaningful on the higher time frames like 1 hour or 4 hour chart or higher. The higher the time frame, the stronger the signal. We have clean and messy swings. Smart money creates clean swings when they want to show direction, and messy swings when they want to confuse the retail participants. This manipulation is international. What we see here is an uptrend. We have higher highs, which we call premium, and higher lows, which we call discount. Smart money buys in the discount, and retail often buys at the highs and gets trapped. The difficulty is located in recognizing when to buy at discount prices or in premium. A downtrend shows lower lows and lower highs. Here the premium is lower and the discount is higher because we are thinking in the short term. Smart money sells in premium where price is overpriced, and retail sells after the impulse exactly where institutions take profit. A real reversal starts when price takes liquidity above or below a major swing. After that, a powerful displacement forms in the opposite direction. A market structure shift confirms the change, price retraces into an institutional zone, and the new trend begins. This is the smart money blueprint. Smart money wants to grab liquidity wherever possible. They have targets like stop clusters, session highs or session lows, or distinctive swing highs or lows. They also want to grab trendline liquidity. Smart money wants to break trend lines sooner or later. Price will move toward liquidity before the real move happens. This explains why perfect patterns fail so often. So for summary, in this video you've learned the smart money logic behind swings, how trends form and break of structure as we see here, and market structure shift as we see here. These elements show us how institutions engineer reversals. These concepts will dramatically improve your chart reading. This was an overview of the entire smart money concept. However, I could explain many details in more detail so that you can better understand the entire concept and recognize it by yourself. Please write in the comments below if you would like me to explain the content of this video in more detail in another video so that you can understand it better. Don't forget to subscribe. Thanks for watching.